Hey there, El Fuego here, and thank you for coming back to the channel today. We're going to talk about a slightly different topic today. Probably not going to be entirely too long. We're going to talk about the idea of alternative investment and potentially why people are attracted to the idea of this investment. So let's get into it. To understand what an alternative investment is, we also really first need to understand what a traditional investment is. Typically, a traditional investment is going to be somebody who invests into a business, whether that's going to be through the stock market. As a personal investor, you use a brokerage account like a Robinhood or an E-Trade or a Ameritrade, and they buy shares of a business. They are purchasing some of the business, becoming a partial owner, and they are investing in that business. Another way to do it is to literally buy part of a business, kind of like Shark Tank. The investors on Shark Tank drop their money into it, and they are investing into that business with the expectation of getting money back, a return on their investment, and getting more money back than they put into it. So an alternative investment would be investing your capital, investing your money into some form of something else with the expectation of your money growing so that you can get your money back and get more money back. Typically, that's going to be something in the realm of a physical, tangible item and thing that you can hold on to. It could be something like watches, collecting Rolexes, for example, specific kinds of Rolexes that typically go up in value as they age, or fine art that you can hang onto your wall. Or a potentially controversial one that is out there right now and currently on the market is investing in Pokemon cards. These are all considered alternative investments because they are not the typical route to wealth of investing into a business or even investing into real estate. It is investing into something different, something alternative to the typical traditional way to do it. What are some pros and cons of doing this, of going down this road? Typically, it has been proven over all the time of the economy that we have in current modern society that typically investing in real estate is going to go up, right? It has also been proven, or has also been shown, the track record of the stock market will go up over a period of time. 10 to 20 years, it is always going up. In any 20-year period that you check it out on, it has gone up. So if you park your money in there, it is a very reasonable expectation that your money is going to increase, and when you liquidate it out, you're going to get more money back than you put into it. And that's a good expectation to have, because that's what you want to do to build your wealth. When you are an investor, you want to put your money somewhere and you want to get more money back out when you get your money out. That's why you're investing your money. Otherwise, there's no point in doing it, right? And so with these alternative investments, there's no expectation or there's no requirement or guarantee that these investments are going to actually go up in value. Sometimes they do, sometimes they don't, and it is a gamble. It is a risk. And just like with the stock market, typically a business who has a higher risk it's a higher risk business, a higher risk industry, there usually will come a higher upside with that higher risk. And just like with alternative investments, they are the same way. And sometimes that higher upside can be pretty darn high, whether it be a 40, 50, 60, 100% return on your money in 2, 3, 5 years. That is a solid return on your money compared to investing in the stock market. And another added benefit is you have something to hold on to. You have that beautiful watch collection sitting on your mantle. You have that fine art sitting on your wall. You have that binder collection of all those beautiful and amazing Pokemon cards and artworks that you like the best, that are dear to your heart. All of it is something that you can hold on to, something that you can enjoy, something that you can get pleasure with on a day-to-day basis, that is not sitting on a screen and watching a ticker symbol go up, or sitting there and expecting and hoping a business just to improve itself and to grow itself so that you can get more money out. You can get some value out of your investment on a day-to-day basis between the time you invested, the time you liquidate. But with any investment, the biggest thing that you really need to understand, I've already mentioned in the video, is that return on investment, that ROI. And to really understand what that is, I've done a video that's running me right here. Go ahead and check it out, and I'll see you on that video.